Hello everybody, and welcome back to a new lecture. In this lecture, I'm going to be talking about how to utilize ranges. Now, what you need to understand about ranges is that they are a key stepping stone in understanding how the market truly books price and how the algorithms really want to move from point A to point B. Now, as you can see, we've got our list of content for this video. First of all, we're going to start off with the pure basics. How to determine a range, right? Most people should know how to do this, but in case you don't, that's where I'm going to be starting. Next, I'm going to be talking about range fractalization. Then, I'm going to be talking about types of ranges. And then, right at the end, or in bits of the videos, so you can't just skip to one part of the video, I'm going to be dropping in the real source. And that's where it's going to be, that's where the real value of the video is going to be found. Okay? Somewhere in the middle of the video, I'm going to drop in something that's coming straight from my mentorship. Okay? And it's going to teach you how to get the best entries just utilizing ranges. Okay, so as mentioned before, the first thing we're going to go over is just how to determine a range. Now, a range is defined by a low to a high that price is currently trading in. So, what I mean by this is, as we can see over here, let me draw this out quickly. This is a high, okay? And then over here, we have a swing low. Now, this swing low to this high, or you could have used to this high, right? Either one works, it doesn't really matter. This right here is our range, okay? Now, what we're paying attention to is our range high and range low. Now, everything in between doesn't really matter until one of these has been taken out, okay? Now, this is where ranges start to become very, very important. Now, ranges tell you where the market is moving pretty much at all times, okay? Meaning, as you can see over here, this was our range high, okay? And it got swept, meaning that we came above our range high, and then we closed back into the range. And now this is very important, okay? The fact that we came out and then we closed back into the range is a key signature in algorithmic price delivery that we are going to reverse and go to the opposite side of the range. Now, I'm sure all of you have heard about time cycles, and our time cycles are a range in themselves. But for this video, I'm going to purely keep it to candle ranges. Now, in the time vault, I'm teaching you how to use ranges that aren't on the chart, okay? Those are the ranges that actually move price, okay? And those ranges don't only tell you where price is moving. Those ranges also tell you which PD arrays will and won't work. And that's exactly what I'm teaching in TTV. Also, in case you haven't noticed, there has been a price change in the time vault. So I'd highly recommend checking that out if you haven't already, and the link is in description. Right, now, you might be saying, okay, well, this candle came up and then closed back into our range, right? But then price retraced back up to the range high and then started closing above it. So then how do we know that this isn't going to be a continuation higher? If we jump up to a higher time frame chart, what you'd be able to see is the following. This was our range high, this was our range low, okay? What you can see is that these candles, although wicked up, never closed outside of this range. Now, this is where we kind of get saucy. Because using these two concepts I'm about to teach you, you can get very, very precise entries and very precise take profits. So, first one. What we're going to be talking about is range fractalization. So, as you can see, and I'm sure most of you know, is range high to range low, and then 50%, which is equilibrium of that range. Very simple, okay? Now, as I mentioned in a previous lecture, equilibrium of the range is very, very important because this is when the back in profit, okay? If you don't know what I'm talking about, then go watch my higher time frame and hedging lecture because that one is extremely insightful. But now what you can do to this range is you can fractalize this range one more time, meaning from 50% to our range low, this is now another super key level, okay? And same with 50% to our range high. This is also a very key level. Now, I want you guys to keep that in mind. Okay, so now that we've got that covered, I'm going to go over a different type of range. Now, this type of range I praise very, very highly, and this is what I teach in the time vault. And I've built a whole model around this, and I'll show you it now. So, what you can see is this is our range high, correct? And as I mentioned, these candles never closed out of our range. But what I need you guys to understand is that every candle is a range in itself. This low to this high is a range, alright? Now I know there might be quite a few lines on my screen now, and it might get a bit confusing, but just try keep focused on these two green lines. This is what's important at the moment. So as you can see, because this candle is a range in itself, what has price done? Price has came above this range, closed back in. Now our next candle opens up. What does it do? It opens high above this range, okay? Remember the candle is a range. And then it closes back into the range. And then our next candle opens up. Now this is our super important candle because this candle we're going to be executing off. This candle opened high, where? Into the wick of candle 2. And then on the lower time frames you would have had your entry and you could have rid this down to range low, okay? Now that's super simple. But now this is where the source comes. And I'm going to be talking about entries inside of ranges. Now I'm going to be talking about turtle soups or liquidity sweeps and how to enter with a high probability that that trade will play out. Now this is where we start to get really quite precise with our entries, because I'm sure 80% of the people have already clicked off this video because they think they already know everything about ranges and they can learn nothing new. But they're going to miss out on this key part of this video. I'm going to stick on the hourly chart for now. Now I'm sure a lot of you guys have heard ICT say not all order blocks are valid. Now I'm going to teach you guys how to see and trade the very first order block that appears inside of a trade, and how to understand that it's going to be a high probability order block and a high probability trade. Now what you guys are going to be looking for is a turtle soup or liquidity sweep. Now what I mean by this is you're going to be looking for a exit of the range, okay? Meaning that price will come up, but the body will close back into this other candle's range. So, as you can see in this example, you might be saying there's no liquidity sweep. But if you look back in your charts, ES swept this previous candle, okay? Now, this candle right here that initiated the move into our liquidity, because this is our green candle, right? This is now our high probability order block. This order block will not get displaced above as long as we're going to stay in a sell program. Now, what does this mean? Well, this means for you that once price closes below this order block with consecutive black candles or with consecutive opposite color candles to what this candle is, meaning that if you're looking for this to be a bearish order block, you want to see black candles. If you're looking for this to be a bullish order block, then you're looking for green candles, right? What you'll be able to see is that price displaces away from this order block, already validating this as your order block, okay? I know I've said order block a million times in the space of about 2 minutes, but just bear with me here. This order block is now valid, okay? And it's high probability. Price will not displace above this order block and this high as long as we're going to stay in a sell program. So, what you'll see is that, let me mark out this high quickly, price comes down exactly how we want to, and it comes back into this order block. Now, watch the bodies. Look at the bodies of these candles, okay? Wicks do the damage, bodies tell the story. Not a single close into this order block. Now, let me tell you something else. Watch consequent encroachment of the wick of this order block. It's a super vital part of this range, okay? So then where do we take our trade? Simply, we take our trade from equilibrium or just from range low of that order block. We placed our stop above that high, okay? And then what do we target? Well, we want to be targeting some sort of liquidity pool or range low. Now remember back to that 5-hour range I talked about? Well, we're going to be targeting the low of that range. Now this one simple trade gave us a 5.5 hour. Now, I know most of you aren't swing traders, and you might be thinking, well, the thing you just shared with me is useless because I trade the 1 minute chart. But let me show you something. Price is completely 100% fractal, okay? So, what you can see here is that we have swept some sort of liquidity above these highs, and I bet you money that another asset has came above this high right here, okay? Creating SMT. Now, this is another vital part of ranges, but I'm not going to go into this yet. So, what you'll be able to see is that this is the candle that sweeps liquidity, and this candle. It doesn't really matter which one you pick. I'm going to use this candle because it's smaller. This candle sweeps our liquidity, and now this big black candle displaces away, right? And closes out of the range of this candle. Now, what you can see, we close one time into this range, but one time and one time only. But look at the open of this next candle. Our open doesn't match the close of this candle, meaning that we wanted to displace away, we just didn't have the time to do so. Okay? Now, if we take 50% of this order block, watch the reaction. Consequent encroachment of our order block is very, very vital. Now, what do? Take our trade either from the low or consequent encroachment. We can place our stop at the high of that order block. Now, this is where we get our super large risk to reward moves. Okay? We can be targeting this sell side liquidity pool. But also, remember back to our range low? That range low is now down here. Do you guys see how powerful this concept is? Now, with ranges, we work inside out. Meaning that, first of all, we want to be seeing this happen. And then you would see, let's say, a 5 minute or a 15 minute. The time frames will jump up and up and up. The same fractal will repeat itself from the first one, so in the 1 second, second one at the 5 second per se, and then 10 second, 15 second, 20 second, 1 minute, 5 minute, 15 minute, 30 minute, and it'll go up and up and up in the time frames until every single time frame is aligned, starting from that 1 second time frame. That 1 second time frame initiated everything. But you don't want to be pattern trading this, because if you pattern trade this, it won't work out well for you. You want to be aligning yourself with your higher time frame order flow. And I talk a lot about higher time frame order flow because it is so vital. And I think that, and I believe that, your higher time frame order flow is the key in all of your trading. Because as long as you're aligned with your higher time frame order flow, it doesn't matter where you enter. It doesn't matter where you enter. You'll always make money as long as you're aligned with that order flow, right? Like, if I started shorting from over here, because I knew that we switched into a sell program, and I shorted any one of these candles, eventually I would have made money. Okay? So, for now, this is all I'm going to leave you with these ranges. I'm not going to give you any hints or anything about these ranges that aren't on the chart, that aren't candle ranges, because I think that's a bit too much to put on just YouTube and public viewing. I have made quite a few lectures inside of the Time Vault talking about how to measure ranges that aren't on the chart. So I hope to see you all in there. If you are looking to join my mentorship, the link is in the bio, and I'll see you all later. Have a good one.